Welcome back to Kryptonite, your go-to source for all things crypto and finance. Today, we have a crucial topic to discuss that could impact not just the crypto world, but the broader financial markets as well. We're diving into some major moves from the Federal Reserve that could have big implications for the markets. The Fed's decisions are always closely watched, but this time, the stakes seem even higher. In September 2024, the Federal Reserve made its first interest rate cut of the year. This decision has been the subject of much speculation and analysis. This wasn't a move they took lightly. The Federal Reserve officials had to weigh numerous factors before arriving at this decision. The cut was largely driven by signs that inflation is cooling down and economic growth is starting to slow. The Fed's goal? To ease the cost of borrowing, support the economy, and keep us on track for that elusive soft landing, slowing inflation without tipping the economy into a recession. Lowering interest rates can make borrowing cheaper for consumers and businesses. This can lead to increased spending and investment, which in turn can help stimulate economic growth. Now let's talk about Jerome Powell's speech at Jackson Hole in August, which set the stage for this rate cut. This annual symposium is a key event where central bankers, economists, and financial market participants gather to discuss important economic issues. Powell highlighted that the U.S. economy has made significant progress since the pandemic, with inflation coming down from its 2022 highs. This was a critical point in his speech, as it provided the context for the Fed's recent actions. But here's the kicker. While inflation is heading in the right direction, the Fed isn't ready to declare victory just yet. Powell emphasized that the fight against inflation is far from over. Powell made it clear that any further rate cuts will depend on what the data tells us in the coming months, especially with a labor market that's starting to cool off. The Fed is closely monitoring employment figures, wage growth, and other key indicators. The markets reacted positively to Powell's hints at future rate cuts. Stocks surged, and investors are now expecting more easing in the months ahead. This optimism is reflected in the rising stock prices and increased trading volumes. Financial analysts are busy recalibrating their forecasts, and many are now more bullish on the market's prospects. The anticipation of lower borrowing costs is fueling this positive sentiment. But remember, Powell was also careful to emphasize that the Fed will stay flexible, ready to adjust policy as new economic data comes in. This means that while the current outlook is positive, things could change based on future developments. So, what does this mean for you? Lower rates could mean cheaper loans and a boost to the stock market, but it also signals the Fed's cautious approach to balancing inflation and economic growth. This is a delicate balancing act that requires careful monitoring and timely adjustments. For consumers, this could translate to lower mortgage rates, cheaper car loans, and more favorable terms for personal loans. For businesses, it could mean lower costs for financing expansion projects or managing existing debt. Keep an eye on upcoming economic reports. They'll be key in shaping the Fed's next moves. Reports on inflation, employment, consumer spending, and other economic indicators will provide crucial insights into the health of the economy. Thanks for tuning into Kryptonite. We strive to keep you informed about the latest developments in the world of finance and crypto. Your understanding of these issues can help you make better financial decisions. Don't forget to like, subscribe, and hit the bell icon for more updates. Stay connected with us for more in-depth analysis and timely news. Your engagement helps us bring you the content that matters most.